Good afternoon, friends. Welcome to Konexio Technical Insights. I am Rahul Randeria and I will be conducting today's show. Today, we would be discussing regarding the trends, the setup, the technical indicators, and the candlestick patterns on the Nifty, Bank Nifty, as well as on the different asset classes. Now, let us have some brief what we have discussed last week. Last week, we have discussed that due to the truncated week, because there was a trading holiday, market would remain volatile as market has entered into overbought territory, where the main indicator was RSI, which has entered into the overbought territory. And we have clearly indicated that until unless we don't see any pullback of 1.5%, one should wait and buy on dips. So definitely for initial 2 days, Nifty rallied marginally, ended on a positive note, and then on the day of the expiry, it crashed significantly. I mean, the intraday damage significantly because of the global cues. And Nifty opened low, and then we saw a slow and gradual bounce from the lower levels, which it has made on the intraday basis. But the closing, what we have seen on the Nifty, is not that much encouraging looking at the current pattern. Now, let us discuss what might happen in the coming week. Let us see on the charts, on the daily charts, I want to say. Next week is a monthly expiry week. Now, you can clearly see on the daily charts, I have drawn a upward rising wedge, a blue two parallel lines, not exactly parallel, but both the lines are converging, are contracting at the higher levels, from where what we have seen and Nifty has seen a breakout on the downside. Now, from if you see on the RSI front, when the prices are making higher tops, higher bottoms, RSI still had made a minor negative divergence. If you see RSI from the highs of, I mean to say, January 2021 till current date, it is still showing a negative divergence. So a negative divergence on RSI as well as a falling rising wedge breakout on the downside is indicating some sort of caution at these levels. As of now, what we have seen a sharp rally in the last 3 to 4 weeks. So we might see a healthy profit booking from the current levels. Again, what we have seen in the recent couple of days, when we have seen a global news where Fed is thinking of an early tapering. I mean to say, early tapering means withdrawing money which they have been printing in the way of quantitative easing. They are thinking of doing quantitative tightening. I mean to say, sucking in the liquidity from the financial systems across the globe. They are thinking that they might start sucking the liquidity. What they are expected early before the time what they have expected earlier, that they might start doing early before the time they have mentioned earlier. So now this would be the reason which might put the global markets under pressure. I'm not saying that the correction will start from tomorrow itself, but now we might see sell off coming at the rise. The rises would be not that much sharp. This might happen into the global markets, but still the primary trend is strong. But we might see some sort of profit booking at the higher levels. So for the next week is a monthly expiry week, so we might see highly volatile sessions till Thursday, because most of the activity would be focused towards rolling over of the position from the current month to the next month expiry. So definitely we might see markets moving sideways or might see under pressure at least for the next week. And further we will see what might happen. Again, US dollar has also risen sharply in the last couple of days, which has put the global market under the pressure. But most probably, I think that US dollar might also become slightly cool off in the coming days. So that might stabilize the global markets. But the larger degree trends seems to be slightly cautious to positive. So now let us discuss what might happen for the next week. As I said, it is a monthly expiry next week. So most of the activity would be rolling over of the position from the current expiry to the next expiry, next month of expiry, shifting of the position from August expiry to September expiry. So we might see highly volatile session. The sessions would be sideways to negative. So one need to be cautious at these levels. Now let us discuss the important support and resistance in the Nifty for the next week. The important support in the Nifty are placed at 16,376. Next support would be 16,286. The third support would be around 16,167. Whereas on the upside, the first resistance is seen at 16,509. Second resistance is seen at 16,628. And third resistance is seen at 16,786. So these are the crucial supports and resistance levels where traders should be watching out for and trade accordingly and plan your trade accordingly for the next week. Now let us discuss Bank Nifty. In Bank Nifty also you will see on the daily charts, and we have been discussing that it has been moving in an upward rising, slightly upward rising channel, or you can call it a congestion range. Again, since the highs, again on the RSI, there is a negative divergence. If you see from February, March highs of RSI, still the prices were going higher on the Bank Nifty, but the RSI has still failed to break those particular overbought area. So still RSI is into negative divergence. It is not coming into that particular strength. Again, the Bank Nifty is also consolidating in a broad range. We have been expecting a breakout above this 36,500 mark, but multiple times it has not been happening. And still we believe that sooner or later, maybe in next 3 to 4 weeks, we might see this breakout before a final correction would happen. This is just a second view, second opinion, what I call. But looking at this current pattern, I think that again Bank Nifty can again drift down to the lower support line, and then it might take some pause, and then we might see some bounce in the Bank Nifty also. So now let us discuss the important supports and resistance in Bank Nifty. In Bank Nifty, the crucial supports are placed at 34,649. The next support is placed at 34,356, and third support is placed at 34,034. Whereas on the upside, the resistance is placed at 35,306. The next resistance is placed at 35,634, and the third resistance is placed at 36,248. So these are the important supports and resistance levels in Bank Nifty. So traders are advised or recommended to trade accordingly, looking at these supports and resistance levels. Now let us come to the third option of the show, which is option analysis. In option analysis, we would discuss where there has been the concentration of the open interest in Nifty calls, in Nifty puts, Bank Nifty calls, and Bank Nifty puts. So first, let us discuss what has happened in Nifty calls. In Nifty calls, we have seen there has been a rise in the open interest in the out of the money calls of 16,600. You can see on the screen. Then 16,700, then 16,800. You can clearly see that there is a rise in the open interest in Nifty out of the money calls. Then you can clearly see that there has been a damage seen in the option premiums of this out of the money calls for the next week, which clearly indicates that the upside is kept for the next week. Maybe 16,700 could act as a very strong resistance for Nifty on the upside. So traders need to be cautious at the higher levels. If there is a bounce in the Nifty, we might see selling pressure coming in at the higher levels. Now let us see in Nifty puts. In Nifty puts, you will see there has been a rise in the open interest in the out of the money puts, which are indicating some sort of building up of long position in Nifty puts. You can clearly see on the screen. The rise in the open interest was seen in 16,300 puts, 16,200 puts, and 16,100 puts. So most probably 16,100 could act as a strong support for the next week. You can clearly see there has been a rise in the puts. I need to say in the premium of the puts. You can clearly see that there was a rise in the open interest in this particular out of the money calls. So definitely one needs to be cautious that because of the monthly expiry, market might be remain or might remain under the pressure for next week. As I said earlier, that looking at the technical patterns, market might behave sideways to down for next week. Now let us discuss what we have seen or what we have observed in Bank Nifty. In Bank Nifty, also there you will see on the screen on the Bank Nifty option chart, there has been a rise in the open interest in the Bank Nifty out of the money calls. You can clearly see that there was a rise seen in the open interest in 35,200 calls, then 35,500 calls, and 36,000 calls. Now here what we can clearly see that rise in the open interest, fall in the premium price, which clearly indicates that there has been strong writing of out of the money calls from the current levels. I mean to the higher level, higher strike price calls. So again here there is a clear indication that Bank Nifty also might invite profit booking or selling pressure at the higher levels if there is any kind of a technical pullback from the current levels. So definitely traders need to watch out this particular strike prices, supports and resistance in Bank Nifty also. Now what we have seen in the Bank Nifty puts, in Bank Nifty puts also you will see on the screen that we have observed that there has been a rise in the open interest in Bank Nifty out of the money puts of 34,500, then 34,000, then 33,500. Again, you can clearly see there has been a rise in the open interest. There has been a rise in the percentage change of the premium of Bank Nifty puts. So, which clearly indicates rise in the price of the premium, put premium, rise in the open interest, which clearly is somewhere indicating that there has been long built up in Bank Nifty puts. So, this clearly is an indication or it is some sort of hint of the smart money that Nifty and Bank Nifty might remain under pressure for the next week because of, I mean to say, the monthly expiry as well as the trends on the technical indicators as well as the option analysis what we have seen in Nifty and Bank Nifty. So traders need to be watch out for. I would recommend or suggest traders, those who are longs, try to book profit if there is any kind of pullback from the current levels. We might see further profit booking at the higher levels in Nifty and Bank Nifty. So the overall view remains that for the next week, Nifty and Bank Nifty would remain either sideways to negative for the next week. So now let us discuss the final segment of the show, which is the positional call. In positional call, what I've identified one stock from an FMCG sector. On Friday, we have seen that FMCG index has given a very strong indicators on FMCG index, and for that's why I have picked up one stock, which is Nestle. The stock has rallied sharply in the last 2 weeks, but looking at the overall pattern since March 2020 till the current date, the stock has been hovering into a triangular pattern. Now Friday, what we have seen that the stock Nestle has given a breakout supported with strong volumes on the daily charts, which clearly indicates that after a long consolidation of 6 to 7 months, the stock is poised for a decent upside rally for long term. Currently, the stock is quoting around 19,571. So any pullback from these levels, maybe the ideal level to enter in Nestle would be around 19,100. Traders, long-term investors, swing traders, positional traders can wait for some dip in Nestle and try to enter at lower levels for long term also. So ideal level to enter in Nestle would be 19,100. So the view is buy on dips near 19,100, 19,200. Hold it for next 6 months, 12 months, 15 months down the line. The stock has potential to test the level of 23,000 from the current levels. So definitely the pattern is very strong. Any pullback should be used as a buying opportunity. So thank you very much, friends, for watching the show. Any recommendation, any suggestion you can give into the comment box. Have a nice trading week and have a nice trading sessions. Thank you very much.